moment. But with that, let's move on and talk about how all of these global cues really set us up and all of the stocks that you should track today. We have Nigel, Vivek and Hormaz all here with the trade setup. Guys, a very good morning to all of you. Vivek, coming to you first, we saw that last hour sell-off in our own markets. Looks like things might be a little bit muted at the open, but take us through everything we should watch.
Well, you're absolutely right. Good morning. So, like you mentioned, even the overnight cues are suggesting quite a bit of a sell-on rallies is what you're seeing. Remember, the IMF, some positive news coming there, global growth forecast, India growth forecast, all of them have been revised upwards. Yesterday, the important cues was that despite Alphabet and Microsoft, delivering earnings in line with expectations, both of them did see sell-off after the results came through. Alphabet, of course, the ad revenue is something that missed estimates. Now, talking about crude oil prices, the key cue, yesterday they gained and Brent now hovering around the $83 a barrel mark. So that'll be something that the markets will continue to watch. Indian markets, like you mentioned, gave up early gains yesterday, ended near the low point of the session. So extremely volatile trading session. Every alternate day you're seeing wild swings on either sides. Yesterday, what drag? Reliance did see profit booking after the record-breaking rally the previous session. ITC and Bajaj Finance were amongst the key drags after earnings misses. Today, what are the key results to keep an eye out for? Sun Pharma, Maruti, amongst the Nifty, Bank of Baroda, Shree Cement and Dabur will be some of the other names in the F&O space that will react to their earnings. Results reaction, keep an eye out for L&T. While headline numbers were quite good, the fact that margins continue to this point may see L&T selling off quite a bit today. Dr. Reddy, SRF and M&M Fin too will react to the results. Like you mentioned, Asian markets, GIFT Nifty indicating a subdued start for our own markets.
Okay, subdued start. Let's see how we move from there. Vivek, thanks a lot for that. Let's also talk about all of the stocks, and Hormaz is here with that entire list. Hormaz, good morning.
Morning, Pavitra. And as Vivek was highlighting, right, L&T will be the stock for the day to watch out for, and that despite the strong management commentary, it will be the earnings miss that might just overshadow what the management eventually ended up saying in the earnings call. Dr. Reddy's as well, the numbers were a beat. This was aided by new products performance. They gained market share in their base business in the US along with new product launches, so that contributed to the earnings beat as well. PB Fintech, and that turned PAT positive for the first time, and the stock now is almost 8% away from its IPO price of 980 rupees. So we'll keep an eye out for that. SRF's numbers were also a miss on estimates, but that was on expected lines because of the chemicals business. And the management, though, has said that they are confident of significant improvement in the fourth quarter, and that because of the large number of plants that will come on stream during this quarter. M&M Finance as well, although the numbers were a beat, the management cut its guidance in the earnings call. They said that the ROA target of 2.5% in FY25 is difficult to achieve because of the tough NIM conditions, and the NIMs are likely to be softer than the earlier estimates. Cochin Shipyard, Voltas, Piramal Pharma, Astral, Web of Global, Star Health, all of these will also have reported earnings after market hours and will react to them today. TCS has expanded its strategic partnership with Aviva with its new 15-year deal. A report suggests that it's worth $2.5 billion, although CNBC TV18 has not independently verified the deal size. And lastly, Ganesha Ecosphere has launched a QIP to raise funds. The floor price of 995 rupees is a 5.5% discount to its previous day's closing price. Back to you.
Okay, Hormaz, thanks a lot for taking us through all of those stocks. We're going to watch for these in today's trading session. Finally, Nigel is here with the cues from the futures and options space. Nigel, the last hour yesterday really saw things turn quite a bit.
Well, that's right. I think a couple of reasons played out. One was that the institutions, the net institutions, the CFI and the DI number put together, they sold close to around 1,000 crores. And the second factor, there was some unwinding of positions on the Nifty itself because the open interest was lower by close to around 9% odd. What about the FIs? Well, they just lightened their positions very little, both on the long as well as on the short side. So it remains more or less constant, with short positioning at around 76% of their total mix. What about the options data? Well, yesterday was the day when the call writing came back into play. So we saw aggressive call writing, 21,700 call, 21,800 call. Between them, they added close to around 60 lakh shares. And the put writers, well, they were running for cover, particularly when the market started breaking down. 21,500 put as well, which was the important level. Well, out there as well, we did see unwinding to the tune of close to around 11 lakh shares. And on the 21,600 put as well, there was unwinding even on that strike. Well, what about the PCR? The PCR came down to around 0.82 approximately. Remember, it was at around 1.2, so it's coming down. We've seen the markets normally see a bit of a bounce when it comes down to around 0.65 to around 0.7. Which brings us to the levels. On the upside, the 21,800, 22,000 mark, that appears like a resistance level. Why do I say that? Going by the options data, and secondly, the technical factor that's playing out, a 61.8% retracement of the recent fall from around 22,200 to around 21,200. Well, that comes in at this level of around 21,800 to around 22,000 odd mark. And yesterday we went to 21,800, we did a U-turn. On the downside, we have crucial support at around the 21,000 to 21,100. And I say this because you have a technical level out there. You have the 50 DMA that comes in there. And a few sessions ago, we went to those lows and we did see a bit of a bounce as well. And, for today's session, I'll be looking at the Nifty Bank. Why is that? Overnight, you had the NASDAQ that was underperformer. The NASDAQ futures as well are lower because of Alphabet. And in yesterday's trade, if you just pull up a split screen, you'll see that the Nifty, well, it ended sharply lower. The Nifty Bank actually was a relative outperformer. Yes, in this month so far, the Nifty Bank has been a relative underperformer, but I'll keep an eye out on the Nifty Bank. The bulls may turn to it and say, let's see if you can support us for today's trading session. It plays out the weekly expiry as well. So that's the crucial one that I'm looking at. Back to you.
Okay, so let's see if the Nifty Bank does show up to really support the bulls. Nigel, thanks a lot for getting us all of those cues. We are going to